Welcome everybody to Stable Stories with Resolv, and Ivan is the founder of Resolv. You guys might have seen Resolv online in the news. They recently raised a $10 million Series seed round, and they are also focused on the stablecoin sector, and that's why we're here. We're going to dig a little bit deeper, a little bit on what Resolv is all about, what some of the things that we don't necessarily see front facing, more behind the scenes, and want to dig a little bit deeper on that, especially your profile, Ivan. That should be very interesting. And also anything that's pertinent when it comes to your fellow co-founder and also other team members. I think that would be also interesting as well. And then we'll always kick off with some of the base level stable stories questions. And to begin, I think this is always something that's fun. When was the first time you actually used a stablecoin, Ivan?
Yeah, thanks. First of all, happy to be here. Thanks to everyone participating. I'd say I would start with a story, which is not when I used it, but when I first heard it. It would be really strange. So my background is TradFi, and I've been working in structuring. And I recall a day when our head of structuring, the global head of structuring, had a meeting and called everyone to participate and told everyone about crypto stuff. Let's put it this way. I believe it was in 2020, something like this. And he was basically speaking about DAI and how DAI works and the mechanics. I was totally confused. And basically people there have been in derivatives, structured financial instruments, and all that kind of stuff. But the general concept and the idea and some of the setups and thoughts getting into the mechanics of how CDP and stablecoins work was pretty confusing to the most of people out there, as the blockchain concept in general too, for many of those. And incidentally, the first stablecoin I used was DAI. And I was like, okay, that's at least, okay, I can totally get USDC, I can totally get USDT, that's straightforward. What's more fancy out there, how that works? It feels like a little bit different, materially different. And then, basically when I met Ron Christensen after a while, I was just saying, hey, actually, it was the first stablecoin I used. They still basically, I bought 100 DAI back then, and they still sit in my wallet. So I'm those sticky hands, which basically keep this. So that's how the story goes.
Let me have a quick follow-up question there is, when you say use DAI, was that actually using DAI as a payments, or was it also participating in the CDP? Was it something else?
It was just, again, I wasn't such an avid user. It was initially, it was an experiment. I tried to figure out how that works in general, how the liquidity looks, how the peg keeps itself, just trying to figure out what it is in general. And back at the time, was not actually participating in any kind of DeFi and everything else. It was just idly sitting there. Again, you say that I use DAI as a payment. I think generally only two stablecoins succeeded in being transactional stablecoins, right? It's USDT and USDC. And even DAI, even though I believe they had more than 20 billion TVL back at the time, you could see them being proposed as a potential way of settling things, mostly for crypto native setups, like paying for conferences or something like this. But maybe I'm missing something, but it looks like these times have gone a bit. And we're not seeing too much of those options now in general. And so DAI, I believe, never actually went the way of being the transactional stablecoin in that sense. So it would be hard to, though I believe there was a time there that was happening and people settling in DAI for some of the chain activities. But currently, I believe this transactional use case is much less pronounced.
Yeah, I agree with
what is your monthly active users? As a stablecoin protocol, what is your MAU, the well-known metric? You can say it's the people who have the stablecoin, especially if it's still generating, right? People who have it in their accounts, because basically the use case is just keeping the value and generating yield. And it can't be considered as a use case, just keeping it and holding it and preserving value and hopefully accumulating it.
And I think what ends up happening in crypto is, in the beginning, you have ways, you try your best to measure adoption, traction, retention. And I think holding gets thrown into the mix, even though in traditional companies or startups or fintech, you don't get credit for idle assets per se. So I think it's interesting, especially as market cycles also change. And if things are very volatile, you might see a lot more activity. When things aren't as volatile, I think you have some of what we're talking about here, which is more kind of idle assets, at least on the non-yield bearing stables. And so I think as we move forward as an industry, it'll be interesting to see how also we qualify what it means to actually have user adoption with the stablecoin category. And I feel like you're seeing a lot of analytics platforms stepping up, defining kind of new ways to measure progress and success, or maybe the opposite as well. And then maybe what I'm interested in as we're talking about this general stablecoin topic is, what are your views on what stablecoins can be in the future, and maybe tying that into what you guys are also building at Resolv. Why does Resolv exist today?
Yeah, sure. I'll come back to this topic of transactional stablecoins and just expand it a little bit. So I think there are different use cases for different stablecoins. Again, there are transactional cases, and they are pretty limited, I'd say. Although that doesn't mean that we can't try to tap into this category, but they're kind of standalone a bit. Then there was CDP use cases, basically. And again, it's getting leveraged exposure to the underlying collateral, if you think of it, right? Because it's a CDP model. And then we're seeing the emergence of the investment stablecoins, basically. And this will become huge, I believe. We're seeing more and more of that. And like, being more specific, I wouldn't call them, and actually the regulation wouldn't treat them likely, stablecoins, because they are basically kind of capital protected structured instruments or structured products, where they can be characterized as tokenized money market funds or tokenized funds, or again, structured solution, structured products. But we'll see more and more of those, because if you think of it, like the transactional use case, it's great. It's first of all, it's basically what drives the industry and what is on the surface of everything. And like, it's super important for on-ramps, off-ramps, for cross-border transactions, etc. But then if you go deeper, the next level or layer of use case emerges, which is the investment side of things. And it also materially depends on the economical cycle. Like, it depends on the rates in the economy, right? Basically, the more upside in a low interest rate environment you can provide for these products, the higher the adoption. The higher the interest rates and the lower the upside, the lower the adoption of these instruments. I believe we're starting to enter the market cycle where we can see material expansion of this. And so we'll see a lot of new things happening in the investment stablecoin space. I believe we're one of the representatives in general. And we are seeing ourselves a little like how we're seeing ourselves. Actually, there are many ways to present this, but basically we see us as an infrastructure that enables crypto native yields, and their scaling and their staking, which then can be put on stablecoin rails for the best distribution. So for me, stablecoins are the next, and actually pretty cool one, generation and way of distributing and using on-chain yields. So unlike like old instruments and yield aggregators or bolts or something like this, stablecoins have a great utility in general, because you can use them as a collateral, right? That's transferable, they're liquid, they're transparent if built right. You can understand the risks better in general, and we see material advancements on that front too, in terms of ratings and everything else. And so they're just better from all regards than the old setups for yield generation in crypto. And they're also much, much better than structured products in TradFi. So if you take a look at structured notes, EMTNs, or other things, stablecoins are just better for all the reasons which I mentioned, like transparency, transferability. You can use it as a collateral, you can build up leveraged positions, you can integrate across DeFi, yada. It just hasn't happened yet, but it will be huge, and actually it will be enormous. And the main goal here is to be able to accommodate all this development in the space, all the yield sources which can be used to back up these stablecoin products and to keep the risk controlled. And hence our setup. Again, I'm gonna tell a bit more about it. Maybe like in simple terms, we basically segregate the risks of the underlying yield sources into a separate instrument. We call it RLP. It's a protection layer. You can think of it as a junior tranche if you're into finance. It basically protects the stablecoin holders, over collateralizes the stablecoin without creating like capital inefficiencies. So we're unlocking the way to bring crypto native fields to the users in a super usable formats, which stablecoins are.
What I like about that explanation is you're tying two worlds together. You're talking about competing against some of the traditional notes and financial instruments that exist in a non-crypto landscape, but then there's also tying in appeal towards the crypto native crowd. And so I want to unpack that a little bit more and curious, maybe from a simplistic angle, like if you were to try to describe this to LI5 type angle for crypto native or crypto proficient users, what's the sell? What's the pitch for Resolv? And I think about this in the context of other yield bearing stablecoins. Maybe you could tie that in, like what's better about Resolv versus the others?
Yeah, sure. Actually, again, so we have two token structure, right? We have the stablecoin, we have the protection layer. And the fun fact is that it basically is an attempt to segmenting the user base. So for the conservative users, and that can be TradFi people, that can be neobanks, that can be all the others who basically concerned that stuff is going to blow up, which happens from time to time in crypto, the stablecoin part, which is overprotected by the second token, is a great solution. But this second token, okay, now the question is who's going to buy that? So you're protecting the stablecoin holders. Who's going to want to do this? But people will want to do this because they're getting materially higher yields in this protection layer. So basically saying, hey, take a look. The world is relatively simple if we simplify it. There are risk-conscious people, which are more used to kind of risk-free rates, like 5, 6%, maybe. And there are degens and there are crypto-native users, which are much more risk-tolerant, but which crave much higher returns. They look at 20+%, basically, something like this. At least. I'm not talking about 10x leverage degen on perps. I'm talking about the delta neutral yield farmers. And so this second product gives exactly that. It is not a stable coin. So you won't have this insurance or absolute low risk. It can go down, but on average, it provides leveraged returns of crypto native yields. And this leverage comes not from our degen strategy, but just by the construction. I won't dive into details here, but basically based on the fact that yields from stablecoin being channeled into this protection layer. As they get enhanced, basically. So protection layer gets the risk premium. So for degens and for those who look for high yields, it is a super simple, easy instrument to get exposure to higher crypto yields in a super simplistic format. And that's what we have seen. So basically, if you take a look what happened back in December last year, when the funding rates were pretty high after Trump won, our RLP was showing 50-60% APYs, and people just aped in. We had more TVL in RLP than in stablecoin. People were just getting exposure to the high interest rates, the high funding rates, and they got the ability to do that. And the same happened like a few weeks ago again. We've seen material inflows into RLP because it's like the simplest way in a single click, basically with a liquid market, get into an instrument, which gives you that exposure, which is at the same time liquid, which can be used as a collateral, which is integrated across different venues. So yeah, that's the value proposition. Basically, if you consider yourself the one who'd love to benefit from the better rates, but you don't need per se to have a stable coin in there, which is like just $1 every single day. You just need the output in terms of return. That's a good solution, which is hassle-free.
Correct me if I'm wrong, but as I'm thinking through what you just said, and just for people listening, what Ivan's referencing is RLP, which is their protocol token. But when you're describing the competitive edge, is it right to say it's more, okay, so if you're targeting these crypto native users and they're looking for higher yields, it might be actually a slightly less risky product to go into with higher yields versus other stablecoin systems, because the way you are structuring the RLP token is such that the stablecoin that you guys have is actually less volatile in terms of losing its peg.
So let me dissect this a bit. And yeah, I believe our setup is a little bit more complex compared to some others, obviously because of the two token structure. So RLP is not a protocol token. right? RLP is the product token. There are two product tokens, the USR, which is the stablecoin, the RLP, which is a protection layer. And basically, RLP absorbs the losses of the general strategy if they occur. And thus, it can't be called a stablecoin. And it is not a stablecoin. If you take a look, it just reevaluates every day. Hopefully, it gains in price. And that's what we've seen over the last year and a bit more. And so, for those who need the stablecoin with a decent yield, the USR is the solution. If you just want to get the yield in the form of investment instrument, which is liquid, but you don't require it to be always pegged, so you can't lose a single cent basically on it, you can go into RLP and you'll get above average returns. You still bear the risks, basically. It can go down. It's not a stable coin. But the point here is that for those who go for yields, the stable coin format is not necessarily super important. They just want to get above average yields after all. And that's what we basically provide. Then there is a protocol token, which is called Resolv, surprise, surprise, which haven't been launched yet, but which will be basically, it will be listing it just super soon, basically. And that's a separate one. I would love to dive deeper into this, how we try to drive the growth of stablecoin industry in general and our expansion into the value of this protocol token, but that's a separate one. RLP is basically a way to get leveraged exposure to the crypto native yields in the industry while bearing some of the risks, obviously, but without the hassle of doing these yield generating strategies or anything else yourselves.
And acts like an insurance fund for the actual stablecoin.
Yeah, actually, you can think of it as a decentralized, scalable, market-driven insurance fund. And that's a very good explanation here. Most of the insurance funds are internalized. Stablecoin projects raise funds for those, right? They're not capital efficient. They're limited. So if your TVL goes up 2 times, you need to go and again, try to get that money into the insurance fund or you're less covered, right? In our case, it's been driven by the market and funded by the market. And it's, well, compared to other solutions, it's 10, 20 times thicker, basically. So what's not to like?
Are you familiar with Liquidity by chance?
Sure. Actually, had quite a number of discussions with the guys like back 2 years ago, I believe, on one of the, I believe it was the first stablecoin summit back in Paris, ACC. Yeah.
And they were pretty big during the last market run, I feel, but I'm curious, how would you guys explain the differentiation between Resolv and Liquidity?
I'd say in general, Liquidity utilize the CDP mechanics. And again, I don't want to try to juggle financial terms here, but CDP mechanics, they are less capital efficient. You need to over collateralize the underlying rate because you don't hedge the price in general. In our case, you can have in $1, you can go and mint one USR, 1-to-1. It's capital efficient. It can keep peg really well. And if you take a look, I'll have some statistics. Actually, our peg is tighter than USDT, which actually, well, surprises me a bit, but that's just how it is. Due to the fact that we can instantaneously unburn for the interface if the users require so. And then also, basically, we generate yields based on staking, we generate yields based on funding rates as an adult neutral setup. But again, the idea is broader. The delta neutral stablecoins, they're becoming more and more pronounced. I'd say there are new projects entering the space. We want to be broader than that. We'll be expanding the yield sources. That's why I said that the idea is to enable infrastructure to have the broader setup of yield sources to scale that. We're not saying, okay, this is the robust setup, for example, like CDP model, or we have just a delta neutral one. We want to go beyond this and stay relevant whatever the market offers in terms of yields. One example would be that take a look at some of the credit funds out there. There are a lot of those, and they're pretty successful. They make 15, 20% on stable coins. We can basically be rails for these funds to provide them with the liquidity and to put them into the stablecoin rails because of this protection layer, because we can absorb some of the risks. So that ultimately we can be the infrastructure that can enable all of the yield generation sources to be put on stablecoin rails and to be put basically in the distribution of neobanks, of traditional banks, family offices, et cetera, et cetera. That's the broader idea here. And hence why I believe we're a bit different from the other projects out there in terms of setup, in terms of approach, in terms of how we try to build the hybrid stack, generating yields from centralized solutions, from decentralized solutions. We go for the product, basically. Our main goal is to build a product which will provide yields and be stable. Yeah, I think many people do this, but that's our Northern Star, basically.
Yeah, that makes sense. No, also the way you're explaining everything, and I appreciate the clarification and everything that you're going through. I think it'll be helpful for anybody listening. But it seems like capital efficiency and then also user experience seems to be like a core tenet towards making the product better, at least for all kind of participants.
Yeah, I'd say, yeah.
As an oversimplification.
It's great. Basically, you need to make a juicy product. That's the goal. Obviously, there are additional things in crypto. There are a lot of mechanics that allow you to grow. Obviously, if we have done what we do in Web 2, we haven't been able to grow that fast because we utilize the mechanics which allow to grow fast in crypto, and that's great. But core thing, and first and foremost, you should build the product which is viable, sustainable, and cool for the users from all standpoints. And UI and UX is one of those. And you know that we're pretty focused on that. And I believe we managed to actually build it in the right way because the majority of the team is fintech, actually. And so we want to build things which users love to use, which they understand how to use, which they can easily interact with, which are intuitive. Again, though, we have a pretty complex product, but we try to make it in an intuitive way. And the second main thing is to generate actual revenue and to scale the business and to be able to share that upside and growth in general with the users ultimately. Yeah, that's just the motto of what we do.
That makes sense. And I think that's a good transition to the few last questions I have just to close things out. But just one would be, what has been the most difficult part about bringing Resolv from stealth all the way up to the point we're at today? Anything that's been surprising for you as a founder or working with your co-founder? Curious on what's been the biggest challenge or maybe even successes that you've surprised yourself with?
Yeah, I'd say I'm a happy man that I have our team, our co-founding team and the team in general. And that's basically why we managed to achieve what we have achieved. The main struggle was like the chicken and egg problem, initial one. Just when we started, like a little bit more than 2 years ago, we knew no one in the space. We had the names in TradFi, but we haven't been not known at all in the industry. So we started basically from scratch and we didn't have any big names backing us. So like this cold start was a real problem. And when you don't have names backing you, you don't have the TVL, it's hard to attract investments, it's hard to get traction, it's hard to put yourself on the map, it's hard to get the users. It's all intertwined, right? You need to pull something to make it happen, like the first domino to create a chain reaction. And for us, this domino was actually enhancing the product, integrating with Hyperliquid, enabling perps and Hyperliquid as a hedge and increasing yields for the product. So that basically when the markets went good back in November, we've been prepared with the product, building all over the time, building relationships, just going and talking to everyone in the industry, making connections. And basically it all fell into one place and we've experienced the growth which we've had. It was fueled by the setup which we had in the product and the fact that people already knew a bit, at least, about us. Now it was strengthened by the performance. But it was a challenge, I'd say, and we got lucky with the market. I wouldn't argue here that definitely markets play a major role in the success of any kind of crypto business. And for stablecoins, the main challenge is the GTM, or go-to-market. Like people ask me on how this can be done, and I was happy to elaborate on that. But the rule book is relatively simple. But in this rule book, one of the most important ingredients is to get at least a little bit lucky with the markets so it can ride the wave.
Yeah, totally. And it feels like you're focused predominantly on a very crypto market segment for now, at least in the beginning. And I think that's paid off a little bit, like you said, with the Hyperliquid integration and likely other subsequent similar kind of adjacent integrations as well. What does the next, let's say, 6 months to the rest of the year look like for you guys?
Yeah. Actually, we always targeted the institutionals, obviously given our background, right? Worked a lot with institutionals, related entities. We actually work with regulators, we set up structured products, et cetera, et cetera. That is our main goal. The thing is that to get to that point when you can work with these institutions, you need to have the traction, you need to have the track record, you need to have the backing, you need to have the name, you need to have the resources. And that's basically what we've been focusing on before. So again, you can't grow as fast as in crypto anywhere, I think. And it's great. If you do it right, you can actually put yourself on the map and you can know the industry pretty fast. So you asked me what was a bit surprising. It was not that surprising, but the scale of it was surprising, how small the crypto industry actually is. On a level where you build meaningful things. It's really super small world. And we're happy that we've been able to kind of put ourselves on the map in a relatively short time frame, basically like within a year after we launched like the first alpha version of our product back in December 2023, year and a half now. But still, yeah, that's basically the case.
Kind of a sidebar before I finish up with the one last question, but how big is the team right now? You mentioned you had a really good kind of strong team that's brought you this far. What does that look like?
Yeah, now it's 22 people. We've been 15 for a pretty long time. And lately, after the fundraise, we just expanded in the areas which need expansion as you grow. Because obviously, when you scale, especially in TVL, the load increases and you have to handle more. And then getting back to your question, which I didn't answer before with regards to the plans. As stated, we target institutionals. Our main goal is to scale as much as possible. And I believe the battles of the future, especially stablecoins, will be fought on the distribution field. That's the key point for us.
Any specific type of institutionals, or you're just casting a wide net to figure out what exactly is hot?
To name one name, for example, 4 of our 22 people in the team come from Revolut. And that's one of the areas we want to target, for example. Because this is the way which scales rather easily. You can always, and we will definitely be super focused on working with a brick and mortar distribution in key regions, such as the Middle East and, say, Asia, in terms of enabling regulated wrappers, in terms of working with the kind of more conservative capital allocators. This will require dedicated BD effort, potentially regulated vehicles or entities or partnerships which enable this. And this is our key goal for the next 6 to 12 months. But it's like the goal not for 6 or 12 months. It's the goal for 3 or 5 years, because this never happens quickly. You can integrate new product features. You can make a lot of things in crypto in 6 months or in 12 months. But in the, let's put it, old school brick and mortar world, it takes more time, dedication, and commitment to actually bring it to fruition. And we're targeting that.
And I totally can empathize with that as someone who's done a lot of enterprise and institutional deals, especially back when I was at Avalanche. It usually, you think it takes 2 years, it takes double. So I would say double, triple your estimates. And then you got to do like a barbell strategy where you try and get short wins, but also optimize for the big whales effectively. But yeah, easier said than done. And
yeah, it's never easy.
Definitely.
But that's the goal of the whole industry, basically. I believe as an industry, and I'm sometimes a little bit, I don't feel good about the fact that we sometimes see how people try to compete and fight each other a bit within crypto, though our goal is to go for this 20 trillion of alternative investments outside of it and try to capture that, where the market is really small. If you take a look at DeFi, and actually you just throw out some of the double calculations and everything else, it will be less than 100 billion, which is actually relatively laughable compared to some of the other things in this world. And our goal as an industry, I believe, and all the players here and participants, is to go and expand to the world which hasn't been known yet how cool it is to use the new financial infrastructure.
Totally. And I think that's where we'll see where that takes us, right? As an industry, it'll be interesting to see how the pie grows, and then maybe we change, or the meta changes from trying to fight for the small piece of the pie and figuring out how actually to grow the whole thing so everybody has a fair share.
I'm super bullish right now.
We're still very small.
And I believe Nick participated in the previous stories, I think.
Yeah.
If I'm not mistaken. Basically, yeah, we had the discussion with him. I just shared a bit with him saying, hey, I'm sometimes surprised how people in TradFi, our colleagues, we both have TradFi background, they don't see how this is going to change. How this is basically taking the world slowly. if you take a look at the adoption of stablecoins and things happening in the space, it's actually massive. But as people sometimes say, you can't see big things when you're up close. But that's what actually is happening. And we basically share the same idea that it's one of the pivotal points right now we're standing in when this will be growing in such a huge way, which is hard to actually predict. And that makes us both super bullish and excited about what we do.
The barrier of entry has always been high for those kind of external folks. And I think that the complexity is really where people get hyper obsessive. And I think that's what's not creating that clear line, right? And so people are trying to dissect, the differences between a lot of things we talked about actually, and then probably even more, and then probably some things that are totally not even relevant to the go-to-market strategy for most stablecoins, going even a level deeper on like the blockchain level, perhaps. And then by that point, you probably throw in the towel and give it up, and then you have to wait for a big market boom to signal to your boss or MD or whoever it is to then take a look at the sector again. Or I think another thing that will happen is a big institution will just adopt this outright at some point, and that's when the dominoes start toppling. I feel like that's something that's common.
And actually, it's the asymmetry of the returns for mining, especially given the fact that it's basically a money market instrument. And if it's a money market instrument, then like your upside is not that huge. Okay, as a corporate or as a bank is different because it's a line of business. For example, as a corporate treasury, if you think, okay, let me go into stablecoins and get, say, 8% instead of 4%. What's your upside? It's relatively decent, I'd say, but what's your downside if it blows up? And then go explain to your boss that what you did was in best intentions. You have a bit of an asymmetry in your remuneration or punishment, let's put it this way, of the things that you did. The risk profile of the symmetric here, it's a little bit tough, that's for sure, but we see how it changes. And it's fun to note how basically 2 years ago, I believe I was one of maybe 200 people I know in TradFi who basically looked into this. And now like almost everyone, at least in some way, touches crypto or stablecoins more specifically, at least in some way. And that's just how it happens. And then there will be books written on, imagine how this, like the title, like you go by the bookstore and you see the book there and it says stablecoins, a silent revolution. I think that's like it's gonna be written at some point in time.
Amazing. We'll have to follow back on that once you publish that book in 2 years.
I'm not sure I'm gonna be writing that one, but yeah, hope to be able to contribute at least.
So maybe someone else.
Well, I can take the responsibility, but just a little bit later I have some more important stuff to do right now. Let's put it this way.
Fair play. Appreciate this conversation. This is great. I think one last question we'll conclude on, as we put this in context of probably crypto savvy listeners who tune into Stable Stories. What would you like them to leave behind when they think of Resolv at this moment? What's a rallying cry? What's the call to action? Anything? What would you like them to hear?
Yeah, call to action. I'd say what we try to do in general, and I think it's a good intention, is to change the perception of value and value accrual and value accumulation in crypto in general. So the current narrative is relatively, well, let's call it straightforwardly, paper-handed. Like we can see how value flows from one protocol to another. We see how airdrops have been farmed. We see how everyone just sells things and just thinks, okay, let me go to the next shiny thing, etc. Which is, again, totally fine. It's a free market. But the thing is that I believe that's due to the fact that often we are not, first, the valuations are inflated compared to the actual output which you are getting by participating in a token. Because sometimes there is no fundamental value, sometimes this value is very obscure, sometimes like you're not actually getting anything additionally or whatever. But I believe this is going to change. So we are slowly entering the phase where we'll be able to get fundamental value accrual for the crypto products, protocol tokens too. That's what we try to build. That's what we try to do. We want to make this meaningful. And I just want to ask, if I may, in general, the holders and the crypto users to try to be a little bit more discerning in their actions or the patterns of behavior and thinking a little bit in a longer term, like not maybe 7 days, 30 days, 6 months, but more like 2, 3, or 5 years in industry in general. I know it's hard. And I know 2 years in crypto feels like 10 years in the other places of this world. But still, I think that's what the industry lacks a little bit. The commitment or consistency or belief in the general direction of where we are going. That's maybe a bit idealistic, but that's just how I feel.
No, I love it. Great way to wrap things. Let's make sure to think about crypto in a much longer term horizon. You heard it first from Ivan. If you're thinking about it in even 2, 3, 4 years, let's double that. These things are going to change the way we transact, the way we interface with finance, so many different things. It should be interesting to see what happens, especially in the context of Resolv. So for anybody that's listening, if you guys are curious, we'll have this recording up online fairly soon. Resolv.xyz is the domain if you want to learn a little bit more deeply. And if there's any questions, feel free to reach out. We'll make sure to route it to Ivan.
Thanks for saying that, because I didn't do that. I spent my
no
time
worries.
on,
I wouldn't be doing my job as a
ideas.
marketer if I'm not plugging you guys properly.
Appreciate
But yeah,
that.
thanks again, Ivan. Really appreciate it.
Absolutely. Great vibes. Thanks, everyone. And have a great rest of the day. Thanks.
See ya.